Morning. We have reached mid-December and want to bring you the latest data here in the Austin metro area. So, as we get near the end of the year, where are buyers today and where do we think they're coming? How much demand is going to be there as we start 2025? Well, let's start with Redfin. They are stating that early stage home buying demand is picking up to its highest level for them in 15 months, despite the fact that mortgage rates have stayed higher. According to Redfin, they saw a 17% year over year increase from August of 2023. They saw that this last month. That's after the election. So, again, they're feeling that more buyers are reaching out to them and starting their shopping. Whether or not it leads to contracts hasn't been seen yet, but they are at least seeing buyer demand pick up. I'll come over here to Zillow. Zillow also has come out with their 2025 home predictions, and they're painting a positive picture. Rosy might be a little much of a stretch, but essentially what they're saying is that they predict 2.6% home value growth for 2025, which for them was very similar to what they said for 2024. This is national, not local to Austin, but they're predicting that there's going to be enough demand that we'll see some national appreciation in the housing market. They're stating that flippers could have more buyers, landlords could have more tenants, as long as the investors remain optimistic about profits and rents. So we'll see where that goes. Obviously, this is not local to Austin, but in 2020, in the next year, they're predicting 4.3 million home sales. That was up a little bit from 4.1 that we saw back in 2023. And we're targeting probably around 4 million this year. So lower than last year, 2024 over 2023, but they're predicting we'll see a bump back up in some buyer contracts in 2025. What could drive that is going to be mortgage rates. So as of this Monday morning, we're looking at 6.68 on the 30-year fixed. That's a positive sign. We basically have been since probably October, we've been at or above 7%. We got really low in September as we got ahead of that first Fed announcement. Rates had really come down. I'll show you in a minute where that kind of spurred the market up a little bit. Since then, the rates went back up. They kind of touched 7%, but they're starting to come back down. I'll show that to you in a chart here at the bottom. So if we look at this chart, this is November 1st. So we go back to that, we were around 7%. We dipped for a day under that, but we kind of stayed above 7% until we got to November 25th, just a few weeks ago. And then since then, we've been in the high sixes. And then on Friday, we had another drop down. Will this stick? I have no idea. But if I look back at 2022 and 2023, and now this year, each of those years, the price tended to kind of spike up in October, and then it would soften from then until, let's say, early the next year. And then we'll kind of have to see what happens next year. But of course, the Fed during that whole time has never made a move on their rates. They were staying high during that whole time. This is the first cycle where the Fed is now lowering their rate, which impacts the shorter term trading, but we'll see what kind of impact that has on the bond market. Hopefully, it will help ease some of the pressure on the mortgage market and allow buyers to be able to get, relatively lower rates, meaning like mid sixes, low sixes, maybe even high fives as we get into sometime next year. So fingers crossed, that's what I'm hoping to see. If I come over here, this is current data. So this is the number of active versus sold listings in the market. Green are the active single family homes on the market. Blue are the sold listings per month. And again, this is for the whole market. You can see this is a natural trend. We have this bell curve every year. Listings go up until we get into early summer. They kind of peak out. And then typically they drop off in the fall. You don't have as many sellers hitting the market. You don't have as many buyers coming to the market. And the sellers who sell, their homes will go off the market, but you also have sellers who will just take their homes off the market too. And that helps reduce inventory as we get to this time of year. If we look back at September, so September, we started with higher rates and they really were coming down. And you can tell we bumped up in sales in October. I'm looking at this, at least 100. I mean, not a lot, but we had more sales in October. I think those lower interest rates kind of helped buyers, even though that was pre-election. It helped buyers kind of start to think maybe the rates are coming down. Rates went back up. We saw sales drop again, but we've also seen listings come down. Here's what it did to impact the price. So this is the green is the original list price. And again, this is not per house, it's for the market. And the blue is the ultimate sold price of those listings. You can see we had a big gap in the spring. A lot of people are, especially on the selling side, you're optimistic. You want to try to get a big number, but there's a big gap there. As we got later in the year, it tightened up a little bit. But we can see rates stayed high. We saw sales kind of drop. Our median low for this year so far was 425,000 for the market, but in October it jumped back up to 429.9. I think that again is because those rates had come down. It allowed buyers to maybe make a better bid on a property or just feel more optimistic that rates were coming down. So we saw that spike up a little bit. It's come down a tiny amount in November, but basically in line with October and November. I think that's a good sign. What we're seeing here is despite the fact that the listings are coming down, despite the fact that the list prices are coming down, the actual sold price of the market is starting to flatline here, let's say around 425. And again, that's not an individual house, but just seeing as a whole, the market may be starting to stabilize now based on the last 2.5 years of correction. Ignore December because there's just not enough data. And so homes are not selling above list price, which is what this would be telling us. It just means we don't have enough data yet. I think once you get to the end of the month, it will look more like the bars to the left. All right, so I wanted to wrap it up with this. So in February, the city passed the home initiative, phase 1. This is what would allow in the city limits of Austin, a single family property owner, if you're zoned single family, they rezoned every lot to allow those homeowners to consider building up to 3 units on one lot. Now, there's other things that have to come into play. You've got deed restrictions, you've got tree ordinances, there's other things, HOAs, but there are plenty of neighborhoods where this could work. So this article is saying, hey, here's one of the developments, one of the first ones that is actually coming to market. So as you can see, we got house 1, house 2, house 3. This is one lot. So it's not subdivided, meaning different tax addresses. These are all the same address. It's the same lot. They'll probably just be 1, 2, 3, 123 Main Street, number 1, 123 Main Street, number 2. So this is showing that there are developers pushing this home initiative ahead. It's still early days. There's the second part of the home initiative is allowing owners to subdivide their lots down to a minimum of 2,500 square feet to create a different lot. So if you actually wanted to carve these off and make different addresses, there aren't, according to the permits, there aren't as many people trying to subdivide the lots. They're mostly trying to do these types of projects, I think because they're faster. And so anyways, these are basically condo regimes. So the way to sell 3 houses on one lot is you just put a little invisible HOA over the top. It generally doesn't collect any dues, but it allows these to have a condo regime so they can be sold as condo homes. These are very popular in Austin, and I expect we'll see more of these projects moving forward. Anyways, I hope this was helpful. If you know anybody looking to buy, sell, or invest in Austin, make sure to reach out to us. And of course, if you want to follow these videos each and every week, make sure to check out our YouTube channel and click the subscribe button below. I'll also drop in a link to the Zillow article if you want to check that out on the web. Anyways, hope you guys have a great week, and we'll talk to you next Monday. Thanks.